Fellow Denverites. Welcome to State of the Market Monday. Today we're reviewing the Metro Denver real estate scene for February 26th through March 4th, 2025. If you enjoy roller coasters, you'll love these numbers because the market's showing a few good twists and turns. This past week, new listings surged onto the scene, boosting our active inventory to 7,485 units. That's 2.2% higher than the previous week. Sellers, if you're aiming for that fleeting sweet spot before everyone else decides to crash the party, consider this your cue. Historically, listing activity ramps up through spring and early summer, so you might want to claim that prime real estate season window before the line at the real estate carnival gets too long. But keep in mind, with inventory significantly higher than this time last year, that magical list it, get offers by noon phenomenon might be more myth than reality these days. On the pending front, 957 units went under contract, barely down 0.3% from the week before. Seems buyers are cautiously circling like they're deciding between guac or queso at a Super Bowl party. Some are jumping right in. Others are taking a second, maybe third look. Meanwhile, 954 homes officially closed, a whopping 55.9% increase from last week, which might prove some folks did find that perfect dollop of guac after all. Now, let's talk speed. The median days on market dropped to 17, down 10.5% from the prior week. It's not exactly lightning fast, but it's quicker than rummaging through those holiday leftover decorations you never put away. Showings, a healthy 15,411, up 8.5%, meaning more potential buyers wandered around open houses, maybe hunting for the perfect backyard to host their future summer barbecues. That said, overall showings are still a tad lower than last year, which suggests buyers are playing it cool and focusing on the best priced, best located home first. So if your listing is basically the real estate equivalent of that droopy supermarket bouquet, don't be surprised if folks walk on by. The supply of homes is at 1.8 months, up 2.5% week over week, like topping off your gas tank at a road trip. More homes are hitting the market than going under contract, which means the prime conditions we saw last year could be short-lived again if buyers keep taking their sweet time. Sellers, let's be real. Nobody wants stale cupcakes at a party, and nobody wants an overpriced listing. If you want to get those offers rolling in, focus on pricing from the start, and maybe consider a little fresh coat of paint. Speaking of pricing, more than a third of homes that went under contract had to reduce their asking price, and those reductions now hover around 5%. So if you started off with aspirational numbers, like me hoping to run a marathon without training, be ready for a reality check. You can either adjust quickly and find those eager buyers, or watch your listing age like milk. The weather's turning mild, and interest rates have dipped a smidge, giving buyers a little extra breathing room in their budgets. But remember, new listings alone won't seal the deal. Sellers who polish their homes to shine, think professional staging, updated finishes, and top-notch photos are the ones churning heads. With active inventory likely to keep rising, there's a real chance we see the market's momentum peak earlier rather than later. If buyer demand doesn't ramp up to meet these new listings, we could be staring at a surplus of homes by mid-year, like a buffet line no one's quite ready for yet. So my friends, as we march deeper into spring, keep in mind, buyers, you've got more options. Don't be afraid to negotiate or take your time. Sellers, this window may be brief. If you're serious, price it right, stage it well, and be ready to pivot if the market shifts. God bless your listings, God bless your closings, and God bless the Mile High City. May your real estate deals be swift, your negotiations victorious, and your next barbecue epic.